What's up, guys? All right. Let some people jump in. Computer's been slow today. Lots of fun. There we go. What's up? We got some people here on YouTube. How you guys doing? Pretty quiet weekend. Didn't do, well, we did one trade. Saw a couple that I could have taken, but I didn't take them. TRD Farmer, how you doing, man? Sam Wise. Happy Father's Day yesterday. You too, guys. I did a lot of cleaning. I finally got my wife to quit her job. So that was kind of like my Father's Day gift. It was like her last day of work yesterday. Pretty cool. How many ribs do I eat? No ribs, man. There was Rib Fest like going on in my town, but didn't end up eating anything from it. Mainly just did stuff with the kids. Good morning, Noah. How's it going? Morning, Deborah. Aaron. Welcome to the community, by the way, Aaron. I saw you in there. HRJ Trading. This guy's got his shit together. Good charts. After the YouTube show, do you want to do a Zoom call that I could join, or is that tomorrow? Tomorrow we do the Zoom. Right now, Brian has his call going on, so I feel like I'm like stepping on his toes a little bit. But yeah, like yeah, Brian's got his call going on right now that you can join. And yeah, I got one tomorrow with the community, and I got one the following day. I would do one today, but like my Mondays are like all like preparing for the week, and then right after I'm done this live, I do a call with Max Maher to go over some stuff that we're planning on for like the Fanova side. But yeah. Yeah, talk about Ripfest. It was a kind of a letdown. So there's another like Ripfest that goes on near my area in Brockville that we go to every year. But the one they did here in my town, which is like only 15 minutes away from Brockville, it was kind of a letdown. It was the first one they ever done. They had like 2 like booths there, and they were charging like $24 for the bouncy castles for kids and like $10 for like face painting. I was like, what the fuck happened? This is insane. Like, all that stuff's usually free in the Brockville side. So definitely Brian's mowing Brian's grass this morning. Yeah. All right. I should go over the market. So I've got until 10 a.m. So I got about another 15 more minutes to like chill with you guys. But yeah, we'll go over like the trade we did in the community. For anyone who was wanting to learn SFPs, we did an SFP trade. So we can go over that. I was hoping for a little bit more profits, but like it was still insanely good. It was still like a 1 to 4. But yeah, we came up when we had this like impulse move right here. And apologies for my computer being laggy. Right here we had an impulse move into this small consolidative period, and then a following impulse move down, which creates a supply concern. Whenever you see stuff like that occur, even if it's in the middle of a range, like anywhere where you have a fast move, build small base, and then have another fast move down, or vice versa, fast move up, small base, another fast move up, that's demand in that sense. And over here we have like a supply version of that. So when we come back to revisit it, when you start to see any form of double bottom or bottoming effect going on, you can assume that up here is going to likely be the top side of a potential range. So if you are entering any trades, you think of this as a potential barrier for your target where you're preparing for an exit of your trade. I didn't jump in the long, but we jumped in on the short that came from that right here. Now, if I can get my computer to like actually chill out, I can like zoom in a little bit and go over it. Let's see. Caliber, hope your weekend went well. Thanks, man. It's pretty darn early for you. Thanks for showing up. I know where you are. And it's probably like 6 a.m. But yeah, we jumped in on this trade together as a community. We had the loss of uptrending momentum, right? It is evolving momentum because we went away from this more broad momentum over here that came from the bottom. And then we kind of spiked up, induced liquidity, came down, retested the momentum in confluence with giving us a sweep of that liquidity. And because that candle closed back inside, this candle right here closed back inside this range from this high, it was considered a swing failure pattern. And during that moment, you can jump in on a short. The very, very first concern with every SFP is the local low right here. But normally SFPs are like an attack of a strong low. So if you think of it that way, where if you're following market structure with your strong lows and your strong highs, and you usually anticipate that to be an area where you can put your stop loss. In this case, like you prepare like to be stopped out of your trailing position. But yeah, so we ended up coming down. We built this like awkward little regression trend on the way down, really slow. But for anyone who was a part of that trade, we know that we had the whole community threw their magnets on their chart. So there's no stopping us. And too much power. And we threw Gandalf on there. And once you throw Gandalf on there, you can't pass, right? You can't hit our stop loss. Well, yeah. Then I just basically instructed people when I was jumping out. I had seen a massive buy wall over here. So I closed 50%. And we also had the confluence of it being at the active value area low and a previous value area high on top of that. So I just took 50% out. And at that point, it was like a 1 to 1.43. So if you're risking to lose $100 and you close your full position there, you would have made $443. And then here I got out on the Fibonacci retrace between this low to high, or high to low. Sorry, this high to low after we got the change character occurrence right here, and that was the end of it. But now where we are, we zoom out. We've got out of the valley area, and now we're retesting a previous valley area low as resistance so far. We got a little bit of a kind of like a head and shoulders vibe where we created this demand zone. We had this impulse move up, base, impulse move up. So if we lost support, the same way we saw in the past over here for this supply concern for our last trade, this would be your little demand concern. If you're to lose any local support, you'd likely come down here and see active support. And because of that, we're kind of building like this head and shoulders kind of pattern. We're losing this value area low. I could see us like potentially using this as resistance, maybe a bounce off the VWAP right here. And then if you get the lower low, I'll feel safer about potentially entering any shorts. We got quite a deviation of the active value area that we're just left. And I have my door open and I can see a cat trying to get inside. Let's see if he comes in here. Oh, he's gone. Okay. But anyway, sorry. We had a value area. Yeah, so yeah, we're deviated away from the value area here. We've got a potential head and shoulders pattern after testing the value area low of the previous range there. And yeah, so if we lose this local support, come down, retest it as resistance while simultaneously losing the VWAP, then it'll be a decent time to prepare for a potential short. And right now our stop loss guard is right here if that were to occur. So and at that point, we basically would watch this little demand zone right here and confluence with this previous value area high. But if we get past this and we get acceptance inside the value area through like a break of structure, then we can start targeting the POC again down here at 105.4 or 105.04, yeah, $105,004. If we get past the POC, then we can start targeting this previous value area low again and potentially sweep the liquidity from this low and this low right here. Now that's based on the structure, I can mainly see that being what's likely going to occur, where it kind of got this like bearish bias posture. We just lost momentum. So it just feels like we're likely going down, not up from here. If we do manage to go up, it'll likely be after a bounce of the VWAP. That's why I really want to make sure everyone waits for like a retest off the VWAP and a break of structure continuation, because having the VWAP in your face like that could end up like causing you to immediately lose your trade. Like as soon as you jump in, you could just get wiped out. But yeah, anyways, if we end up instead getting proper acceptance into this value area at $107,000 because we failed to get that acceptance here, we need to get a higher high, right? If we pull back inside of a value area and then we get a higher high, get that first break of structure, that's a form of acceptance into a value area. But yeah, and then we could potentially see a rotation up to 109,300 if we do get proper acceptance into this value area. But we have to watch out for the confluence at this POC alongside with the 15-minute and the 30-minute order block that are just waiting for us to have it mitigated. So if I were to visualize like what kind of acceptance we would likely get based on the pathing, we'd probably come down, test the VWAP, come up, break the momentum, then come in here, hit our head off the POC, retest the value area low, then get that higher high. And at that point, we'd likely go right to 109.3. That's the bullish case scenario. I prefer the bearish case scenario because it's pretty confluence friendly, and I don't like jumping into acceptance into a value area for a long based on a continuation like that. I'd rather use value area whenever that happens. I'd rather already be in an existing position and then use this to tell me to stay in my position, not jump into a new one. But yeah, so if I were to pick one scenario, I'd be more likely to jump in on the short rather than the long. Well, that's Bitcoin. We tackled through that pretty quick. Tap the like button, Ando says. Thanks, man. Good morning, Andrew. How you doing, man? Caller, is that guy loves to speak? Okay. Yeah, he likes to try to help people get engaged, and he's also learning how to trade too, so he asks questions too. And what I like about like traders just getting in and asking questions is like, especially inside the server, if you guys are asking me questions inside the server, it helps everyone learn the answer to that question, right? If they're just starting off. My account grew more than 10x because my father gave me liquidity. Oh, I love how you just say like, call it liquidity instead of cash. I still don't feel confidence in my trading. I get you. Yeah, so like the confidence comes from like the evidence of your strategy. So if you want to get more confident, then you got to back test. You backtest your strategy. What are your rules? Write down your rules. Have a checklist, and then go in replay mode and go through that checklist for at least 2 years of price action. You'll have a percentage win rate probability based on that backtesting, and that like percentage win rate probability just that's enough to give you the confidence that you need. And let's say your win rate's 60%, then it just becomes basic mathematics, basic probability, right? And if you're constantly risking to lose 1 to 2s or greater, preferably greater, obviously, then mathematically you're going to make money in this space just following those rules like a checklist. And to increase your win rate after that, if you have the rules in front of you, then it's just about looking both ways before you cross the road. And well, at least that's what I keep spamming to the community, where you can look at the order books to see if there's a sell wall on your face if you're about to enter a long. That could help you like ignore your rules during that kind of period. Or if there's a bear concern like a VWAP like this, maybe you'll just wait a little bit longer for that to break. And if it doesn't break, you just saved yourself from a losing trade. Stuff like that. And then make sure you always have exit criteria and have an exit plan for your trades. I promise you do well if you, backtest your rules. How to know what day to look at in the liquidity heat map? That's a good question. So that question is actually pretty easy to answer once you look at like the age of a range, for example. So here, when you're seeing price action just steadily bouncing off the same key levels, like resistance and support over and over again, you can find out how old the range is using this measurement tool. Or you can just look at the dates down below, but you can save yourself time just looking at the measurement tool. And then from there, you can find out how old the range is. So here it's 3 days and 16 hours. It's so it's best to look at the liquidity heat map relative to the range that you're trading. Now, if you're a swing trader, you're gonna have to look at like larger time frames. But from here, we kind of try to wrap that period inside of the options that you have on CoinGlass. So we have 3 days and like 16 hours. It won't fit inside the 3-day chart, right? So we'll need to use the weekly to be able to find that full 3 days and 16 hours. And then from here, you can find out what the liquidity looks like. So looking at the heat map here, we can see that we grabbed all the above like primary liquidity from the local range. And we've have quite a bit below us. So because we're just scooped up that liquidity and hit a supply concern in confluence with a previous value area low, I'd say we have like quite a decent reasoning to come down, and we can we can look at the liquidity heat map and find some key levels and prepare for potential reversals off of them. Because remember, if there's liquidity below us, it's most likely going to be used as entry-based liquidity. And if there's liquidity above us, it's most likely going to be used as exit liquidity. So here, if you're a market maker and you needed to have you need to put in like a $40 million position, you'd be able to do that here, no problem, without any slippage or any crazy price impact. Because right just at this one price point alone, at $103,756.88, there's like $75 million there. And just above that is $117 million. So there's a huge cluster of liquidity just resting below these local lows down here. So that's where I would be targeting if I were to be jumping into any shorts. And I also recommend always looking at like the 24-hour, no matter how old the range is, just to see what newly added liquidity was been added to the market within the last 24 hours. And we can see that, there's more that has been added below us than there has been above us, most likely because we're in an uptrend, right? Every time you have these little swing lows and these breaks of structures, it induces new traders to get into the market. And because of that, liquidity rests right below it in the form of stop losses and liquidations. So just by helping that'll help you and control your bias when you're preparing for your trades. So so roughly around here is where most liquidity is, below these lows. So I hope that helps you out. But basically, it's just about finding out the age of the range that you're trading within. Sometimes the ranges are like 60 days. You remember the ones that we've been in before, like the one between like February and November, for example. How does the market maker move the price to a certain price level? That's a really good question. So they'll induce certain moves at key levels. So I'm actually a market maker for 2 assets. I can't legally tell you which ones they are, but if you were a market maker, your goal is to try to paint a picture to control the psychology of traders. And let's say you are a market maker in this situation right here, and you want to use the liquidity up here to try to exit, right? Then you basically have you have a couple options. You can create a buy wall, right? A lot of market makers will just create buy walls at the top and bottom of structure to induce traders to try to undercut them. They don't want to be undercut most of the time, but they'll create buy walls to influence the price to go up. And in confluence with that, they will also induce changes of character. And you can use volume indicators to try to detect whether or not it's institutional volume. Like the PVSRA is a good indicator you could use. But a market maker will most likely be responsible for a candle like this, and then they'll let retail do the rest. And then they'll plan their exit. So they'll do a market maker push, or they'll do a market order push at certain levels, and they'll have like limit orders and others to kind of like force a picture to be created in a sense. Can I show the indicator? Yeah. Yeah, we'll pull it up. It's a PVSRA by Traders Reality Volume Suite. This guy right here. So you'll see blue. The blue is basically the vector candles. There's a higher probability of market maker influence or institutional influence when you see the blue volume candles. And like the green and the red is just an increase of volume, which could also be caused by institution, but it's just a big fat maybe in comparison to like a vector candle response. Vector candles can also be created by swarm bots or people putting in a large amount of micro orders into the order books. So it's not a guarantee that it's a market maker, but if you see certain confluences, you have a better idea if it is. Oh, we can just use the TR main indicator that changes the candle instead. Yeah, you could do that. There's another version of this that is also free to use that changes the color of your candles. Yeah. And I'll show, I probably already have it open on my chart. I flicker it on and off. In certain like key levels or certain moments, I'll look at it just to take a look. Yeah, here it is. It just changes the color of the candles. It just transfers that data onto your candles to like change the color. Yeah, Traders Reality Main is the one that I was just showing there. I'll type it in the comments. It has like probably a dozen indicators built into it. So if you're someone who has like the essentials plan, it's a good indicator to have because you're basically saving on indicator space. You're getting like 5 to 10 indicators just in one little spot. Okay, so getting some requests to look at other assets. I got like another 30 minutes. We've gone through Bitcoin. We know what we're preparing for. So now it's just a matter of like waiting for that picture to be painted before jumping in. I'll give you guys a signal if I jump in on the trade. The first request was Ethereum. So let's look at Ethereum. I gotta get my computer to speed up a bit here. I'm gonna take down some of these tabs. I gotta move stuff from my C drive into my D drive because I completely filled my C drive and it slowed down my computer like dramatically. See, just by clicking on that, my thing's not responding now. This is ridiculous. It's just gotta get a second. White screen of death. Okay. What's your opinion on using Bookmap for trading? I'd recommend it. Yeah, Bookmap. There's a lot you could do for free with Bookmap, so you don't have to pay for it. But if you're doing this for a living, if you're a trader, like literally you depend on your trading income, I'd recommend it for sure. Like paying for it, you can write it off as a business expense as a trader too. But yeah, it'll allow you to see the limit orders live and active as they're occurring. You'll be able to see them if they're being lifted, so you can get an idea. With Bookmap, what's kind of nice about it, if you see a limit order in a spot, usually longer than a few hours, it's not likely going to move. And I like the fact that you can look at active market orders too. So yeah, definitely recommend Bookmap to anybody. Now there is new tool out from CoinGlass called the CoinGlass Legend, which is free to use as well. That I'd recommend to everybody too. We can go over that together. So going over Ethereum, we're kind of talking about this in the last live. We came back inside of this valley area. We bounced off the valley area low. Then we're coming up to the point of control and tapping this supply concern. We mentioned in the last live that if we came up to this area, we have quite a bit of confluence for a rejection. We came to here. It looks like we're already kind of getting rejected off of it. Same reason why we're preparing for a short on Bitcoin over the weekend. Let me just send this back. There we go. So you see here where we had this impulse move down, built this base, another impulse move down. That then became a supply concern. When you see moves like this, it tells you that there could be residual sell orders there, right? So we come up to tap it again. You got to prepare for it to potentially act as resistance. We just lost momentum. We just got a 15-minute. See, nope, not a pullback. So probably a 5-minute change of character. Yeah. So yeah, we got that break. So we flipped bearish on the 5-minute already. We're hitting this previous level of support as resistance. We're dancing right now on the VWAP. I don't like that crap whenever we have these crazy lows like this, because we're trying to look for a confirmation level for a continuation. You don't want it to be too low like that, because then your stop loss guard relative to your entry point, it's going to give you poor R&R. So that's where our break of structure key level is. Let's look at the 15-minute for a second. I'm kind of hoping that we go higher first before going down. But if Bitcoin's building a head and shoulders right now and we lose the VWAP, Ethereum is probably going to fall down with it. We'll see what happens. I'm kind of hoping that we come up first before going down, and then we'll have better 15-minute structure to define a potential short. But yeah, right now, if we lose this on the 5-minute, your best stop loss guard's up here. You'd watch out for this valley area high as potential support at 1550. 1550, 2550. And along the way, you also have to watch out for this little demand concern right here. Right, same reason why we got to watch out for this. We come down, you can see that we had this impulse move, base, another impulse move. So this became a form of demand. Warning is that there could be potential residual orders there. So you just got to watch out for that. If we get that break, you might see a bounce off of this for another retest, another leg down kind of thing. And then here would be your primary concern along the way. And if we break past that and we get acceptance into it, then you can start targeting the point of control and value area low right here. Basically where this liquidity right here ends. There likely is liquidity here as well, but with the confluence of the POC and the value area low and the liquidity area, this is basically where I would likely target. So yeah, Ethereum's looking structurally bearish too, like it's starting off that way. We're in an area of confluence where you prepare for shorts. So, but I do hope that we get better positioning. I do hope that we kind of go up first before confirming to go down. If we instead go up instead of confirming to go down, then I'd be happy waiting longer for a better R&R basically. But that's Ethereum. That's actually not too bad. But if I were to pick one between Bitcoin and Ethereum when it comes to trading these two forms of structure, I'd likely pick Bitcoin over Ethereum because there's less barrier concerns and more confluence with the break, like the break of structure continuation at the VWAP here. The VWAP being on our back actually is not that bad either. It could be considered a good form of capital guard, but this low here just makes things really kind of frustrating. Sure, you're going to be looking at something like this for your entry and your stop loss. And to your first barrier concerns, like a 1 to 1.5. If I'm really nervous about an area, I prefer my R&R to that area that I'm nervous about to give me at least a 1 to 2. Because if I'm forced out of the trade, let's say we get an opposing change of character, like a double bottom structure, then I'm going to have a net R&R over the month that's going to be lower, and that will hurt me long term. So, but if we manage to break past that value area high, it's a 1 to 1.3, 0.5. So you'd be risking to lose $100 to gain like 350, for example. But here's our key level. Mark that. You'd want to have at least a 5-minute candle close below that area. Is my VWAP anchored period default session as well? My VWAP is anchored to the day. So it's just the regular VWAP. It's not anchored to a week. It's not anchored to a month. It's just anchored to the day. So default. Nothing crazy. I turned off my bands multipliers. I don't use them in my trading. I might start using them in my Fibonacci trading, but yeah, right now I'm not using them in my trading. Hey Shane, how you doing? All right, so we got a request to look at. We looked at Ethereum, we looked at Bitcoin. Next request was virtuals from Richmond. If I see a virtual request, it's always from Richmond. Let's take a peek. Yeah, today I'm going to start staking virtuals. Let's see. Okay, so last time we were looking at it was from this structure here. We saw this supply concern, so we marked this zone as an area of potential concern. It held it down for a little bit until we broke past it, mitigated it. So whenever you see this happen to a supply concern like this, think that the next time we come back to it, that we're likely going to just break right through it for a continuation, kind of like what we saw right here. Because that whole area has been completely mitigated. Like through here, for example, we've mitigated about, I'd say like 70% of it. Added liquidity came up. We didn't get the higher high, so we stacked even more liquidity. So when we came back up through here, all that was used as exit-based liquidity, and on top of the fact that there's likely orders here too resting, and with liquidation orders, stop losses that we all grabbed right through here. We can delete all this now, though. We bounced off the 50-day. I was looking here for potential SFP. We didn't get it, obviously, but pull this. Yeah, we're at the previous value area low right now. So we're trying to get acceptance into this value area here that's had a huge amount of influence over Virtual's price action. So you see here, you got this value area high to value area low. It greatly influenced this price action. Like the value area high was flush with the previous value area. The POC was flush with it. The value area low was a little bit higher, but we typically behave the same way we do every time we enter back into a previous value area. Sometimes we'll go right through it, but when we find support, it's typically the same support and resistance levels every single time. So here we hit our head off the POC again. We are coming back down to retest this value area low. We got a little break of momentum on the lower time frames. A break of downtrending momentum here. Off the VWAP. So maybe we'll get a higher high, get that break of structure, get above the POC, and then rotate back to the value area high up here. Around 2.06. That's where I'd be targeting if we got that higher high. But yeah, that's virtuals. I'm more bullish on what I'm looking at here for virtuals than bearish for sure. Just got to watch out for the confluences that will come from Ethereum and Bitcoin. It's tough for me to enter long on an altcoin knowing that Bitcoin is looking bearish. So when I do my trades, if I'm trading an altcoin, I want to make sure it's going the same direction or the same kind of posture as Bitcoin, or else I can get punished for it. So that's like, it doesn't sound like pro advice, but if anyone who's new, you're going to consider it pro advice. Like you got to listen to Bitcoin's king in this space. So just be careful. Like sometimes assets have relative strength, but it's not as common as you think. All right. So that's virtuals. Basically, yeah, price actions, breaking momentum. We're going to have to watch out for the POC and complements with like the 5-minute order block. We could hit a head off here and come back down. But if we get that acceptance, another break structure form of support would likely go to 2.06. We got a request for syrup. Sounds like a DEX token because it's food. Every DEX token is named after food. We probably don't have a chart for it, eh? No. Syrup. Okay. Okay. Binance. And if syrup is a DEX token, by the way, it most likely has extremely high inflationary tokenomics. So just be aware of that. If you're thinking about holding this like super long term, most DEX tokens don't reach their all-time highs again after a cycle is over or after their first cycle. It looks like this might be their first cycle based on this chart. Yeah, it's May 25th. Yeah. All right, so let's mark our value areas really quick. So we got 3. Yeah, we got a 3 of them. We got this one here. Mark our uptrending momentum. Yeah, I got test down here, but we got everything we need. And then come on, computer, jeepers. That's good enough for now. Yeah. Based on this chart, I'm not sure if it's the whole history of syrup, but based on this chart, we can see that we're at a new all-time high. So if that's the case, we know one thing, that 100% of holders are currently in a profit right now, unless we have people buying right at this moment, which we likely do, unfortunately. Yeah, so we're deviated away from our current value area. So yeah, it should be bear goggles on only kind of thing. You don't want to be entering into new longs. You want to be staying into any existing longs. So if you got in on the break of this downtrending momentum inside this valley area in confluence with the change of character occurrence, like you had a really decent opportunity down here to enter a long. What was the key level? The key level was right here at this high. So right here, this was an indication that when this broke, that we're very, very likely going to be rotating to at least the value area high. And we got a bit of a pullback, but if your stop loss was at the strong low, you've been fine. The moment you got the higher high, you can involve your stop loss below the new strong low. And then we came up, pull back near the POC, got the higher high, stop loss here at the new strong low. And now we got a little bit of regression trend. We had a pullback here. This is a good strong low. I would keep it at when you have a regression trend like this. You got to always kind of prepare for potential pullback around these when you have posture like this. So when you see rounded tops or a forming rounded top in this case, you got to think of it like the confidence of buyers is like dwindling, it's going down. And when we're at an all-time high, it's pretty common. So when the confidence of buyers starts to go down at all-time highs. But yeah, so just be cautious of this key level right here. If this were to break, you'd have like a 15-minute change of character occurrence. And then we'd likely be going down to hit at least the VWAP. We're probably going to get a bounce. You could see something like this, for example, like bounce off the VWAP, retest, and then it'll look like a perfect like rounded kind of top. And then if we get acceptance back inside the value area, then you start targeting the point of control. If you get past the point of control, then you start targeting the value area low again. But yeah, syrup is also kind of positioned for a spot where you prepare for shorts. You wouldn't be preparing for longs in this thing. And if you're in an existing long, then you basically like a change of character at these levels. Like, yeah, it's important to listen to it, but your final straw is if we get below the VWAP and into the valley area, I would definitely be listening to the market. Don't hold on to that position. If you got in around here, I would definitely exit at that point. But a change of character is enough for me to want to take some off the table. How do you use it? It is not the same as the order book map. It is the same thing as the order book map. It's giving you the same kind of data, except the order books don't show market orders. They'll show you filled orders in the order books, but they will not show you market orders. So Bookmap gives you that kind of edge in knowing that market orders are occurring. And the better, I would say, what makes it a little bit more like beginner friendly is using Bookmap is because it will show you the age of those limit orders, where if you were looking at the regular order books, there's no way for you to determine how long it's been there unless you've seen it there and you mark it on your chart at a certain time during the day. Like I used to put vertical lines in my chart saying like, okay, this buy wall or sell wall has been here since this time. And it gives you a better understanding of whether or not it's like a market maker or just retail. Retail limit orders are usually scared out pretty easily. So you'll see a lot of non-intentional fills if it's been like a young limit order. But yeah, right now the order books are Pretty clear, but we have some areas of confidence, like 106.5K. There's some buyers waiting there, like 200 Bitcoin. And then on the sell side, we have 107.490. About 200 Bitcoin there too. So we had a 200 Bitcoin buy wall and sell wall on each side here. It's good to mark them on your chart too, because then you can see like what kind of picture it could potentially paint if we were to hit those levels. Is it building a range? Are we getting potential confluence at a key level, like a value area high? If you see a giant sell wall at a value area high, I'll be more likely to listen to that because you'll have market orders follow through with it too. Stuff like that. Okay. What else we have in the chat? I got 10 more minutes before I have to jump into my next call. Another degen pick from Freebreaker. AI token AOT. Oh, A0T. I could take a look for that for you, and I'll send you a post inside the Discord. I already have a request for Solana first, but I will mark that down in my to-do list, and I'll get to you as soon as possible with that. I just have a call right after this. Look at the A0T or Freebreaker. Okay. All right, let's look at Solana really quick. And then I got to head out, guys. I bet Solana's positioned to be bearish too. Last time I looked at was on June 13th. Friday the 13th. Yeah, okay. Looks like Solana had some relative strength over the weekend, though. Yeah, it did. We started this crazy uptrend over the weekend. We were preparing for a short. It never confirmed. Right, we had this momentum here. And we hit a previous value area low and value area active value area high, and we just never got the confirmation. That's why you gotta wait for those confirmations. Don't want to get melted. Then we came up here. Here we're at a previous value area high, previous point of control. So this is the value area low of this value area here from historical price action. We have the confluence of this previous level of resistance that can be honored as support as well. So it is positioned to be bearish. You got a little bit of rounded top. We got a change of character occurrence right here. And now we're kind of like struggling to stay above the VWAP. Yeah. So I'll be watching the order books right here to see if there are potential sell orders inducing this downtrend. If we break that lower low, I don't think there's gonna be much left to hold this up. We got very small demand zone here on the lower time frames, probably like a 3-minute, not even 2-minute demand zone. Yeah, like the 2-minute demand zone. It's not very strong. If we come down here, we get a candle close. We're likely just gonna fall right down to the value low at 153.05. But down here is a good spot to prepare for potential longs. So we could potentially get a scalp long to the previous point of control. Based on this positioning, I wouldn't even prepare for a long or a short. It's kind of awkward. We could be building a potential like bull flag pattern or like a continuation. We could wedge down to the apex point and prepare for a break up to the upside. Like we're hitting our head off of this supply concern right here. right? So if we get that higher high acceptance in this value area, we could see a potential rotation to the top of the supply concern. I don't see it being continuing very much after that. It will likely go range bound after that if we got that higher high instead of the lower low. Yeah. So yeah, if I were to pick an asset to trade out of all the ones that we looked at, Bitcoin and Ethereum are the two that look the most trader friendly. Yeah, virtual is kind of the same feeling or vibes as Solana. We could be getting that continuation, whereas virtual is going to that value area high, and Solana could be trying to get to the top of the supply concern at 106, 160. Let's see what happens, guys. But yeah, I'll give you guys a signal if anything comes up. If I find anything safe, I'd hopefully find another SFP. But based on our positioning, we're probably not going to find an SFP today, unless you get some super low time frame stuff. Oh, thanks, man. Appreciate it. Search for A0TW. Okay, wrapped Ethereum. Okay, so it's a decentralized potential chart. I'm going to screenshot that. That's a pretty... There we go. Got that screenshot. All right, cool, guys. You have a great day. Thank you so much for watching. If anyone has any questions, reach out to me in the Discord. I'd love to help out. Remember, watch out for those impersonators. So you'll see my handle down below this in this video in the description. So if you're getting spoken to by a Kyle, just make sure that it actually is me and not an impersonator. I'll never message you first. I'll respond to messages, but I won't go out like sending a bunch of messages. I get like 50 messages a day, so I'm not like hunting for more work or, you know what I mean? If you're in one of the servers that I provide like help with, just message me inside the server. I always prioritize them over the DMs. All right, cool, guys. Have yourself an amazing day. Please like, subscribe, and share. I'm trying to grow this channel as big as I possibly can. And yeah, I'll see you in the next one. I'll see you guys tomorrow morning. Bye.